Happy Friday, everybody. Chris here. Well, the conflict in Iran and headlines, oil prices continue to be the driver of what is going on with the mortgage market. Wax on, wax off. We're on, we're off. It's kind of hard to follow. It's a bit annoying, but it is what it is. And this is really this orange line here tells the story of what's going on. So what we were looking at, this orange line here is 30-year fixed interest rate since the start of the conflict. So this is late February. We had interest rates at 5.9. Saw them shoot up sharply when the war started, up to 6.6. Tensions eased a bit. Rates started going down. Oil prices started going down. But then the conflict ramped up again, all the way up to peak interest rates here on May 19th, 6.75 basically percent, and then heading down a little bit here as of today. Now, we've seen some peace talks in the last few days, and so seen things improve a little bit, but particularly these last few weeks with interest rates above 6.5%, that has been the catalyst for a drop-off in purchase demand. So if we're going to look at our purchase demand here, we can look at the mortgage purchase application index. That's the best indicator of demand. And we can see here this black line, which is this year, compared to the red line, which is last year. We've been positive year over year for most of the year, but the last few weeks we've seen things drop off a little bit, demand drop off a little bit, and if we don't get some improvement in interest rates, we're going to see it go negative year over year. So that'd be a bad thing. So really hoping that we can get interest rates back below that 6.5% mark, and we're getting close. Like they just pointed out today, things have dropped off from about 6.6 down to about 6.58. So we're getting close again to that 6.5% mark, which I think is really the important part of purchase application index and housing demand being positive. One other interesting chart that I like to look at is the percentages of properties with price reduction. I think this is a great indicator of the health of the market and how things are looking. And if we look at this gray line here, this is 2022. This is the line that looks a lot different than the others, and that's because 2022 started with some fairly low interest rates, but that's when we saw interest rates really start to climb, and that's when, of course, the percentage of properties with a price cut jumped along with the jump in interest rates. But if we look at this year compared to the last couple years, it's pretty darn close. The market is similar balance than we've seen the last few years. So fingers crossed they'll figure out a way to work out this Iran thing. We can get interest rates down and get our housing demand positive. Thanks for watching and have a great Friday.